Good morning, everyone, and thank you very much for joining us again on Morning Markets. Today, we're just going to focus in on a couple of key factors that helped support positive asset markets yesterday. So just looking at yesterday in terms of some of the news flow across the day that appeared to give some more positive impetus to asset markets and kind of offset some of the more negative news that there is around further restrictions as it relates to COVID-19. So the first discussion point really is what was happening from a Brexit perspective yesterday, and it does seem that a number of the contentious issues have maybe moved on a little bit. There was some positive news flow and some positive comment, both from the UK negotiating team, but also from Michel Barnier and also the EU president. So maybe a little bit of movement there, and that did really support sterling yesterday, where we saw sterling increase about another 1% over the course of the day, trading up to about $1.34 and change over the course of the day. So a positive there. The other side of that, of course, is that currency strength does have a bit of a negative impact for the FTSE 100, and when we looked across equity markets in Europe yesterday, the FTSE 100 was probably the weakest market as a result of the move that we were seeing in sterling and a few other things going on in the background as well. In the US, the other supportive factor from yesterday does appear to be some movement with the fiscal support package that we've discussed, and indeed Nancy Pelosi encouraging congressional leaders to come to the table and really debate some of the key issues that are there, and that is definitely a move forward. It does seem that the bipartisan group that's been working between the Republicans and the Democrats have crafted a fiscal package that could be supportive and could be agreeable to both sides. I'm not going to say it is, because we've been here many times before since July, but on key aspects of the deal that's on the table, there is clearly support from the unemployment extension of those programs and also support for small businesses. Two areas that we know need additional help at this point in time, but also that will be impacted by the current arrangements which expire at the end of this month. So positive stories there from a political perspective, both appearing to support asset markets yesterday. So we saw European markets up over the course of the day, and then if we look into the US yesterday evening, both the S&P 500 and Nasdaq closing up about 1.2%. Just digging into that a little bit more, we still continue to see the economically sensitive areas of the market outperforming. So by that I mean the Russell 2000, which had another good day, and also at an index level or an indice level, the financial sector as well, which is performing well. On the economic front yesterday, we had a couple of data points that's worth commenting on. US industrial production increased 0.4% month on month for November, and we did have a 0.9% increase in October, so a little bit of a slowdown there, but not significant really. I think looking at it in totality, where are we relative to where we were at the beginning of the year? So industrial production overall in the US is still down about 5% from the pre-COVID levels. And if we look then at how capacity utilization, or the use of equipment and processing within the economy is today, it's some 73.3%, and that is about 9 to 10% below where we were at the beginning of the year. So quite a way to go to get back to production levels as they were, but gradual improvement continuing to come through there. In the UK, we had unemployment data yesterday, and we did see an increase for the 3 months to the end of October to an unemployment rate of 4.9%. Digging into the data a little bit more at an industry level, one of the main areas of job losses, and probably doesn't come unexpectedly given how we are as a society shopping and using retail at this point in time. Retail was a large loser of jobs over the course of those 3 months, and that coincided with some of the furlough schemes coming to an end, etc. So we can see the impact there. Looking ahead to today, I think today could be quite an interesting day for asset markets in particular, given that we have the Federal Reserve meeting in the US. Not that we're expecting any material change from their policy at this point in time, but I think it will be about the commentary that Jerome Powell makes about how the Fed are considering asset purchase programs, whether they're thinking about extending the duration of the asset purchase program, and also the tenor at which they purchase. Those will all be things that will be important for the market to hear over the course of today, and we'll report back on that tomorrow. So please do join us again tomorrow, and do subscribe on our YouTube channel. Thank you.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.